ICICI Ventures plans to float a public issue, and well, the company's the arm, if you can call it, is ICICI Bank's private equity arm, and expects to raise $150 million from the issue. Ritu Jindal, a banking expert, joins us to talk about that. Ritu, my question to you would be: does this in any way benefit the parent ICICI Bank?
Well, it does benefit the parent to a slight extent, Neeraj, not very much if you actually look at the numbers, because ICICI Ventures in particular, the SOTP value contribution is just about 1 to 2% for ICICI Bank overall. It just contributes about 11 to 19 rupees per share of ICICI Bank. But this is a big move for the Indian capital markets overall, because it's going to be a one of its kind issue, one of the very few private equity and venture capital entities listed. In fact, in the global capital markets, you have the likes of a Carlyle or a Blackstone listed entities. The AUM of ICICI Venture stands at $2 billion as of last fiscal year. It has further plans to raise more money after Vishakha Mulye has joined on the board. It plans to raise $150 million more, taking its total funds to $500 million for its second PE fund. Also, it has plans of a $500 million infrastructure fund, a third fund, realty fund, another 500 crore rupees. So there's a lot of fundraising activity expected. Analysts typically value these companies in terms of, as a percentage of the AUM. For ICICI Ventures, it's been valued at about 10 to 15% of the FY11 expected AUMs for ICICI. Of course, the only listed player for ICICI Ventures would then be ILFS Investment Managers, which is of course valued at fairly lower multiples. But yes, for ICICI Bank as a stock, this could be a fillip in terms of sentiment. In terms of numbers, very little contribution.